The groups are asking the court to forgive and declare the forbearance credit policy as unlawful, set it aside, and block any cancellation of student loans based on it. In the first round of relief legislation, Congress said months in which borrowers benefited from the payment pause would count toward loan forgiveness for public workers. And roughly half of the more than $1 trillion in outstanding loans have been made directly by the federal government and being repaid through one of the 4 income-driven payment plans. The plan is capping monthly payments at a given percentage of earnings and with the promise that the balance will be forgiven after 25 years of payments. But a 2022 Government Accountability Office found that the Education Department did not accurately track the payments until a decade after the first income-driven plan was actually implemented. This is the Institute, and they say that $39 billion in debt cancellation is only a fraction of the true cost of a Biden-proposed plan, assuming the per-borrower cost of cancellation remains the same. Now, for $39 billion in debt cancellation, it's only a fraction of the true cost of Biden's proposed plan. Assuming the per-borrower cost of cancellation remains unchanged, the groups estimate that the adjustment program could cost $175 billion in foregone payments and interest. We have some major news. There are upcoming changes to Social Security, and it may take effect sooner than we expected. As Social Security is adjusted on an annual basis, lawmakers are working together to improve the program. On one hand, bigger monthly payouts may arrive for many beneficiaries, but a certain group of people could see their tax liability increase. For over 49 million retired workers who depend on Social Security benefits, the program is a vital financial lifeline that helps cover their monthly expenses. This retirement program has a significant impact, lifting more than 20 million people out of poverty. It includes 15 million individuals aged 65 and above. But Social Security is not a static system. It continuously adapts to changes in the U.S. inflation rate, life expectancy, and national refund that's given to each resident who files an income tax return for the previous fiscal year. And the first round of distributions is set to be received on or before September 12th. And with 2 additional distribution dates scheduled for September 9 and 13, according to the governor's office, those who have not filed tax returns, owed money to the government, or filed their taxes after July 31st will receive their checks 10 weeks after the Department of Taxation receives documents. The governor said in a statement, "It's my hope that the $300 million in tax refunds begins to go distributed so far, bring some relief to the hardworking people in the state of Hawaii who were hit hard by the crisis." According to the governor, the amount each person will receive as part of a refund is determined by the person's filing status, adjusted gross income, and the number of claimed exemptions. Single filers earning an annual income of under $100,000 will receive one-time checks of $300, with single taxpayers with a higher gross of income receiving $100. Married couples who file joint returns are also set to receive $300 as part of the one-time payments. In addition to the stimulus checks, Hawaiians can look forward to the state's minimum wage being raised for the first time since 2018. The bill approved by Governor Ige raises the minimum wage of $10.10 per hour to $12 an hour starting October 1st. Also, some good news for you guys that live in Indiana. They can expect to see another $200 in your bank account after Indiana lawmakers approved a second set of payments during the special session. This cash comes from the state's surplus. The latest projections from the Social Security Trustees Program combined funds may run out in 2034, at which 80% of benefits will be payable. And the fund used to pay retirement benefits may run out even sooner, in 10 years, at which point 77% of benefits will actually be payable as well. And during a Senate hearing, the SSA Chief Secretary stated that Social Security is a pay-as-you-go program, and up to $160,000 earnings are subject to payroll taxes. In 1983, when major bills were enacted to shore up Social Security trust funds, 90% of uncovered benefits fell below the terrible maximum. And since then, it has remained above that same level. And even the Senate Budget Committee chairman has touted this bill, which is called the Medicare and Social Security Fair Share Act. It would require wages above $400,000 to be taxed for Social Security. Other Democrats also support the idea of making high earners pay a large sum into the program. Representative Larson and the senators introduced the Social Security 2100 Act bill with more than 200 Democratic co-sponsors, calling for applying Social Security payroll taxes to incomes of over $200,000, while also having the wealthy pay taxes on the businesses and income investments as well. Polls have shown that raising Social Security payroll tax is a popular topic with the public. Yet the recent Senate hearing, some leaders and experts questioned what is the right approach to help people out with their American stimulus cash. But so far, Democrats' proposals would actually push the marginal tax rate to over 50%, and many would break Joe Biden's promise not to raise taxes on anyone making less than 400 grand. Even Grassley argued this. The next cost of living increase for Social Security recipients is projected to be slightly better than previously estimated, but still the lowest in years. The Senior Citizens League predicts that. And also, they have estimated that in mid-June 2024, COLAs could be somewhere around